Interest rates are going down, and they could actually go down faster than they went up. This is the week. Welcome to Major Money Matters. My name is Major. I'm the host of Major Money Matters. I'm a mortgage broker powered by Edge Home Finance. And this is the weekly report where we talk about what's going on in the market and how it could be affecting you if you're a home buyer, home seller, or if you're a realtor out here working in the market. All right, let's start it off. Hey, Jerome Powell came out this week and he said, quote, "It makes sense to moderate the pace of our rate increases as we approach a level of restraint that will be sufficient to bring inflation down." And this is a great quote, and the markets love this. And the reason the markets love this is because this is essentially saying that the Federal Reserve is going to decrease the rate that they're doing their rate hikes. Now, we were expecting another rate hike in December. If you go back to the weekly reports from a couple weeks ago, I explained to you how other federal, ever centralized banks in other countries like England and Australia, those banks were starting to decrease the rate at which they were increasing their federal funds rate. And Powell now comes out and says, you know what, I think the United States should be doing, we as a central bank for the United States should be doing the same thing. So that's very exciting news. And the markets loved it. How much did they love it? They loved it so much that we are seeing our lowest mortgage rates since September. So things are really starting to look significantly better if you're a home buyer out there, coming down from where we were just about 4 weeks ago in the mid sevens on interest rates, and it was looking pretty bad. And then November 10th happened, where we get the good CPI reading, and now we start to see interest rates come down. Now, in a couple of weeks, you're going to get the CPI reading for November. That's going to come out on December 13th. I believe you're going to see rates continue to go lower and lower. If you follow this channel, you know that as this line trends up, interest rates are going down. And as this line trends down, interest rates are going up. And if you go back a couple of months ago, you can see how we had multiple red days after red days, which means mortgage-backed security are going down and rates are going up. But now look at this chart. There's a lot of green in there. And some of my mortgage friends are extremely happy because we were getting nervous. So there's a lot of green and rates are getting better and better. Now let's see what that translates to numerically. So I want to take a look at this. Now I've told you before, this is not necessarily where I am pricing out mortgages. This is just to give you a general snapshot, and I had to find one consistent website because everybody's situation is different. I will tell you that this website is doing this based on a 20% down payment, but it gives us an idea of rates, where rates are relative week to week. Now, 30-year fix at 6.29. Now, they have that 6.29 a couple of weeks ago. This was above 7. So much better on interest rate. You see VA there below 6. Okay, keep in mind 20% down according to this website, but you're below 6 there. And that is really good because we were looking at VA clients staring at 7%. So that's very interesting. By the way, I'll put this link in the comments. If you're a realtor and you want to know in general where rates are, if you're a buyer, you want to know in general rates are, this is a good website for you to just keep track of everything. Now, we were out last week because we were traveling. Shout out to my Gamecocks who totally destroyed Clemson's Thanksgiving weekend. Thank you very much, Gamecocks, for putting an end to, I think, a 11 or 12 game or 12 year losing streak to Clemson. It was a happy Thanksgiving indeed. But we missed this story last week, and I want to bring this up. Bezos comes out and urges Americans to hold off making big ticket purchases ahead of the holidays. Now, the irony of the world's largest retailer telling us not to spend money while throwing up a bunch of Black Friday sales is not lost to me. But I do want to highlight something in this story. Bezos here is talking about the likelihood that the United States is trending into a recession and people should be holding on and saving their money and cutting back on very large purchases that don't bring any value, like cars and refrigerators and stuff like that. he was talking about these things specifically. I have learned something about life. If you want to be wealthy, you have to listen to what wealthy people are doing and what they are saying. So he's just giving a warning here about where he believes 2023 is going to trend. I do share that belief, which is why I believe in a recession, mortgage rates come down. So that's why I believe mortgage rates are going to be significantly better in 2023. Now, let's get to the headline here that I started off with of why you could see mortgage rates come down faster than they went up. And it has to do with the fluff, the delta, the current delta between the 10-year Treasury and current mortgage rates. Now, let's start with 10-year Treasury chart. Now, this is not the same as your mortgage-backed security chart, but it's important for us to understand how this chart works. Now, the mortgage rates do follow the 10-year Treasury, all right? So, as the 10-year Treasury is going down, mortgage rates are also going down. But if you think back during the pandemic, if you were tracking stuff like this, you will see that when mortgage rates were at about 2.6 or so, the 10-year Treasury was at 0.5. So mortgage rates typically is about 2 percentage points above the 10-year Treasury. However, as interest rates started to rise earlier this year, as those rates continue to rise, mortgage companies actually started to build in a delta between the pricing on their mortgage and the 10-year Treasury. And the reason for that is very, very simple. They knew that inflation was, because rates were going up so high and people were still buying homes, inflation was really controlling the market. And therefore, when those people could get out of those 7% interest rate, and those interest rates that were in the high sixes, typically you're in that loan for about 6 months if you close, and then you do a refinance if rates go down, they knew they had to make their money on the front end of those mortgages. So right now, there's a delta built in by mortgage companies between the 10-year Treasury and where mortgage rates are being priced. Typically, that delta is about 2 percentage points. Right now, that delta is about 3 percentage points. That's why when mortgage rates were going up so quickly, mortgage rates were going up faster than the 10-year Treasury was going up because mortgage companies were simply pricing it in, that they had to account for the fact that they had to make money on the front of these mortgages because people were going to want to get out of those mortgages very fast. What's my point? As rates continue to go down, you're going to see mortgage companies continue to get more aggressive on an incremental level. That's why you should be working with a mortgage broker, because a mortgage broker has the ability to see multiple different banks and see where those companies are making the cuts in order to give people significant pricing advantages in this market. A mortgage broker shops among many different companies to give the buyer the greatest opportunity. So that's why you should be working with the mortgage broker, and that's why brokers are better, because we can see what's going on and how to help buyers. But you could see mortgage rates go down because as those companies begin to cut in to that 3% to get back to that normal 2% delta, what you're going to see is there's going to be competition among lenders, and you're going to see some very good pricing on mortgage rates. So it's a very exciting times. The future is bright. If you're a realtor and you've been sitting on the sidelines, you've been frustrated, don't worry. Buyers are coming back. Rates are getting better. Because think about it. If let's say you're a government buyer, let's say you're a VA buyer, and you're getting priced out at 5.75 right now, you probably still can get a 2-1 buy down or something like that and have a 3.75 rate for a year. And as those rates kind of go down, you can refinance that mortgage. So it's very, very exciting. We'll have to see what happens next week. We're looking at December 13th very closely to see how CPI numbers come out and how things continue to trend down. That's it. We'll see you next time.